The broadcast is now starting. All attendees are in listen-only mode.
Hi, thank you so much for attending this webinar with IAMS and Mutual Trust this Monday morning. So greatly appreciate everyone's time. This is Sandy Vicanti with IAMS, and I head up the Life Division here. And again, just a heartfelt thank you for taking time out of your schedule to attend such an important webinar. Before I hand it over to Mutual Trust, there's a few things that I'd like to go over first. In regards to IAMS, and one of those things is called a business builder. And so what we mean by an IAMS business builder is when you refer an agent over to IAMS and they get contracted, you will receive a $50 check from us as a thank you for entrusting us with that referral. When that same agent writes and places business with us, whether it's on the life, annuity, MedSup long-term care side, you will receive 20 basis points on each piece of written business or place business that agent writes indefinitely. So it's not for 3 months or 6 months or a year. As long as that agent continues to place business here with IAMS, you'll receive that 20 basis point override. That does not come out of their commission. It does not come out of your commission. Again, that comes from IAMS as a thank you for entrusting us with that agent. We also here at IAMS has something called a marketing reimbursement account for all agents. And when you place business with us, $100,000 place business, again, life, annuity, MedSup, long-term care, combination thereof, we will put $100 in a marketing reimbursement account, and that is used for business expenses. That continues to build and add up. There's not a deadline on that. If you don't use it 1 year, we roll that over into the following year. And when you have any marketing or business expenses, submit that invoice to us, whether it's for seminars or business cards, a website, whatever business-related expense that is, we'll pay up to 50% of that invoice as long as that amount of money is in that marketing reimbursement account. We also have something for brand new producers at IAMS. Once you get contracted and in your first 6 months of doing business with us, you place $100,000 of business. You can choose a 2-year producer website that we can create and manage for you, or a $750 cash bonus. If you'd like to hold off because you think you may place $300,000 of business with us, again, whether that's life, annuity, MedSup, combination thereof, you can choose a $1,500 gift card, $2,000 put in that marketing reimbursement account that we just spoke about, or you can choose a Social Security program and 3,000 piece mailing. If you like to hold off because you think, gosh, I'm going to go gangbusters here and produce $500,000 of business with IAMS in my first 6 months, you can choose a 4,000 piece mailing and seminar coaching with a top producer of ours, Dave Pimper, a 5,000 piece mailing and seminar coaching with another top producer of ours, Matt Gill. Or you can choose my favorite, and it truly is my favorite, is the Ritz-Carlton Travel Rewards Getaway Package, where you plan your own destination. Again, this doesn't come out of anyone's commission. This comes directly from IAMS as a thank you for getting contracted and submitting business and placing it with IAMS. We also have strong back office support, whether that is getting you set up with paperless contracting so you don't have to fill out any additional contracting paperwork, running quotes, doing case design, sending out forms, doing any type of expertise coaching, or answering your questions. And really important through all this is that submission to commission. And what we mean by that is when you submit a piece of business with us, we scrub that application, make sure nothing is missing. If there is something missing, we give you a call, make sure that you're aware so we can get that information and submit it to the carrier the same day. Now, we are touching that case through the underwriting process every 3 days. We'll give you a call, about every 3 to 4 days, but we're continuously looking at that case, making sure that it stays on track and commissions are paid just as quickly as possible. Our creative team, if you like our emails, our website, our life and annuity book, our creative team is the one that designs those. They do an outstanding job. Please call and ask for Jacob or Sean. They can help you with any handouts or flyers, any business cards. If you don't have a logo or you need a logo, if you don't have a logo, or if you do and it maybe needs refresh, they can help you with that. Also, personal websites. Again, if you have a website that maybe needs to be refreshed, or you don't have a website, we can create and manage that for you. Any online newsletters, social media advertising, that is huge right now. So if you have Facebook, for example, and you see all of those ads, that's what we mean. And if you're unfamiliar with how to do that, or you would like information on that, we can do that for you. So again, please check with Jacob and Sean in our creative department. They'll be more than happy to assist you. IAM's website, www.iamsinc.com. And our website, I go here every single day. So if you call me up and say, gosh, Sandy, I need a term quote or a UL quote, this is where I run them. If you ask me for forms, this is where I go to get those forms. It's great for any industry links that you're looking at, any current news that affects you in the industry. Our top annuity grid, so if you're looking for the top 5 fixed annuities, that'll be on this website. Our training, so if you like this webinar and you wanting to look for additional webinars to register for, you can do that right here from this website. Any recorded webinars you're able to pull from this website as well. It is a great source of information. Can't stress enough, going to this website, looking through our sales resource library for any questionnaires, any articles or videos that can try to help you with a sale. Again, if you're not registered, I just so strongly suggest that you get registered and take a look around and see what we have to offer. I'm going to send out a poll question here. And by checking yes is just asking for additional information. So here at IAMS, we thought, what opportunity can we give our agents to make sure that they retain as much of the client's sales as possible to increase your revenue? And what we came up with was IAMS Wealth Management. So again, our thought process on that is to increase your revenue with managed money fees. You're able to offer a full range of products and services so your clients don't have to go outside of you for any additional investments or sales. And you're also viewed differently by your clients. You're viewed as a fiduciary through our IAMS Wealth Management. So if you have a 65, or if you're looking to get your Series 65, or you just think, gosh, I don't want to get my Series 65, but how can I recapture or capture these revenue sales? Check yes. Our wealth management team will give you a call and go through the different options that suit you and that fit you, and we'll be more than happy to go over that. Let's see, I'm going to get that closed out. We also have Life and Annuity Academy. Again, I'll launch this poll question. Checking yes is just asking for additional information. This is industry recognized. We're extremely proud of this academy. We pay for all the expenses from your airfare, lodging, meals, and what we do is we have agents all across the United States attend, and it's a 2-day training. We go over indexed annuities and how to unravel them. When is the best time to use them? We go over different industry threats and trends and how that affects your business or your agency. What's really nice is we go over different turnkey seminar systems. So whether you're looking at a seminar that serves cookies and coffee in a library to your more formal settings of a sit-down dinner, we go over what best suits you, what best works in that area of the United States. large life case marketing, whether it's our great single premium life that we rank nationally with, whether it's any of our traditional life carriers, infinite banking, we'll go over that. Different annuity sales topics. We have top agents that all over the United States that we fly in to go over different sales ideas and strategies. Can't stress enough what a great opportunity this is. We choose between 35 and 40. We had close to 1,000 register for our last one. Our one coming up will be in about February or March, so we'll make sure to get that sent out for anyone that checked yes. And then in addition to great commission and service and all the other carriers' trips and incentives, we here at IAMS thought it was really important to offer our agents and their guests an incentive as well. And what we did is chose the Ritz-Carlton in Naples, Florida, and our 2019 Marketing Summit will be August 25th through the 29th of next year. We have real long invitational periods. We just want as many people there as possible. So our invitational period started January 1st, 2018, all the way through June 30th, 2019. The only way to for you and a guest to attend this, just a great trip, would be to get contracted and start placing business with us. And you can do that with a combination of $3 million in annuity premium. You can do $1.5 million in Medicare supplement premium, $2.25 in single premium life. You can do $250,000 in life target premium, or you can do $600,000 in long-term care premium. Again, only way to get there is to make sure that you're contracting and writing and placing business with IAMS. So what I'm going to do is hand this over. Kip Walker with Mutual Trust is just a great, he's our regional VP here, and want to make sure that he goes over the great opportunities that you have with Mutual Trust through IAMS. So Kip, if you'd like to take that over.
Thank you very much, Sandy. I appreciate that, and I appreciate being with IAMS again on this call, and everybody taking the time to join us here. I'm going to jump right in to make sure we respect everyone's time. Again, my name is Kip Walker. I am the Regional Vice President in the Midwest for Mutual Trust, and we enjoy this graphic. It shows basically a man. I like to say it's my profile, but it's definitely not. A guy made up of people, and it's basically talking about crowdfunding. And everybody's heard of GoFundMe and Kickstarter and websites like that. And crowdfunding has become a pretty big deal, pretty popular. But we like to say we've been crowdfunding since 1883, because if you think about what a mutual company is, it's really people coming together and pooling their resources and being able to use those resources when tragedy strikes. And so we like to say we've been crowdfunding since 1883. We have been experiencing a great deal of change and growth since our merger. We merged with Pan American Life, which is another participating mutual company. And that merger took place in late 2015. In 2016, we grew by 16%. In 2017, we grew by 22% sales. So we have really, it's really been a great merger for both companies. And it took us from a small, scrappy insurgency little carrier. AM Best told us that we were too small to ever get an A rating, so we were stuck at A minus. And things have really turned around. So now we're part of a solidly mid-sized carrier, $6 billion in assets, $1 billion in capital and surplus. And AM Best, just 1 year after that merger with Pan American, finally did give us that A rating. So we were pretty proud of that. And if you know anything about rating agencies, they don't get out of the car in less than 6 months. So we were very happy about that. And we have an A rating from Fitch. So A rated across the board, and plenty of financial resources to do what we want to do to grow the company and what we need to do. And so right after the merger, we started out to round out our portfolio. We have been relying on one particular product called the Horizon Value, and its predecessor is identical, but we relaunched that product with a much larger dividend scale. And so that's one of the things we did. We drastically increased our dividends, and then we started rounding out the portfolio. And we were relying on that one product for quite some time, the Horizon Value, with high early guaranteed cash value. Sandy earlier mentioned infinite banking, and that's a very strong space for us. Our number one producer is an infinite banker. But we realized that we couldn't just make this product fit every area of the market. We are dedicated to whole life, but there's different ways to structure whole life products. So we launched another product that was a fully guaranteed whole life contract at a much lower price point, but still fully whole life. And now I get to introduce a new product to you that we just launched called Horizon Blend. And as the name suggests, this is a blended product. It's 50% whole life and 50% term with a 20-year guarantee on the initial death benefit. So this provides our maximum permanent guaranteed death benefit for the lowest out-of-pocket expense. And we're going to go more into detail on that in a minute. So after 20 years, the client can drop the term at any time. But after 20 years, if they do decide to drop the term off, the initial whole life death benefit and paid up additions continue on, and they continue to earn dividends on that whole life portion, and their premium goes down to reflect the drop of that term rider. However, they have other options. They can convert it, as I mentioned, at any time up to age 70. So that's the opportunity for another sale for you. So, and that would be a commissionable sale. We also are earning dividends on the whole life portion the whole time that usually are used to buy paid up additions. And so for those who don't know what paid up additions are, you can think of them as paid up guaranteed whole life policies. You put $100 into the paid up addition, about $94 shows up immediately. It's going to earn 4.5% guaranteed in this case, and have a little bit of a death benefit associated with it. And then by the end of the year, you got $96 in there, and that just keeps going every year, compounding annually. And it's very liquid. The paid up additions money can be taken out at any time very easily. Let's take a look at some nuts and bolts. We have issue ages 18 to 65. It has a minimum face amount of $100,000. So in this case, 50,000 of that would be term and 50,000 would be whole life. You have the 4 price breaks there for volume, and all the rate classes are available at all ages and all bands up to Preferred Plus. How about some features? We have a chronic illness rider that's on the whole life portion for all of the cases table 4 or better. And if you're not familiar with our chronic illness rider, it's the ability to accelerate the whole life portion of the death benefit if the client's doctor says they're unable to do 2 of the activities of daily living, feeding, bathing, that kind of thing, or suffer severe cognitive impairment. And then they're able to accelerate anywhere from 5% to 24% of that full face amount up to $1 million face amount. So if they have a $2 million whole life portion in force, we're going to look at $1 million worth, and they'd be able to accelerate up to 24% of that each year, or $240,000. But they can take that money in whole or in part, on a monthly basis, on an annual basis. And it really is a great rider for those who maybe just aren't going to get long-term care. They just don't want to pay the $5,000 or $6,000 because they don't think they're going to need it. And or possibly they might not even qualify for long-term care and still qualify for this chronic illness benefit because it's written on mortality and not morbidity. You also have the single paid up additions rider for 1035 exchanges and lump sums. And you can put up to $500,000 regardless of the size of the death benefit on the whole life portion. You can, and this is great for those ULs or IULs that were underfunded and just aren't performing. We can 1035 that money in and then rescue that cash value. You can also contribute to the paid up additions rider on an annual basis. We call it our Flex PUA. Again, you're buying small amounts of death benefit, maybe 1, 2, 3 times the death benefit per dollar, but you're really gaining a lot of cash value. And so this is great for those who maybe wanting to add some, additional funding that's going to be able to be accessed income tax free in retirement to their overall retirement plan. We have a lot of risk in our plans out there these days with, many people having exposure to equities and things like that, but it's good to have some guarantees in there as well. And we'll talk more about that in a minute. Full whole life first year and renewal commission on this product. So a lot of times, you guys hear a blended product and you think they're going to crush my commission. Not in this case. You get full whole life commission even on the term portion of the sale. So I think that's very cool and very exciting. And hopefully it perks your ears up a little bit. So how does this work? We have a 35-year-old male here, preferred non-tobacco, $500,000, and this is good for younger individuals who are on a budget. That's kind of where one of the areas we're really focusing on here, but it works at all ages. So in the first year, you're not going to have any cash value. With whole life, excuse me, the first day is the worst day, and that's a great way to look at it because it's only going to get better from there. And the guarantees in whole life are always understated because once a dividend is paid, which we have paid dividends for over 100 years straight. So once the dividend is paid, it's moved into the guaranteed column, and it can't go away. It can't be taken away from them. There's no fluctuation in the markets that's going to affect that growth of the cash value. And what that does is it just elevates all the other benefits. But right now, what we're looking at is just the guaranteed cash values here. We're not looking at any dividends at all. So you can see after year 20, that term rider drops off and their premium goes down. So that decrease in the premium reflects the drop off of that term rider. And by year 30, they have a guaranteed return of premium plus. So what does this look like? So in year 12, their cash value is greater than the premium in year 12. So they pay X in premium, they get X plus showing up in cash value. And this is designed to happen in years 10 through 17 on all cases. In year 20, you have cumulative premiums paid of just over $50,000, almost $51,000. Guaranteed cash value is equal to about 90% of that. It's almost $46,000. So they have 90% of their premium in the cash value, but they can take that cash value anytime. In year 21, you have a death benefit with dividends added in here of $255,432. That's the dividends going to buy those paid up additions, that little bit of extra death benefit. Premium has dropped down, as I mentioned, and the growth in cash value grows by more than the premium they're paying. So their premium goes down, but their cash value goes up by more than they paid in, $3,608. In 30 years, they've paid in total premium of almost $74,000, and their premium is still at $2,290, and they have a guaranteed cash value of $86,000, so about $13,000 more in cash value. So there's your return of premium plus a little extra. What does this mean for the client? It means they have options. We're not just building cash value in here in the contract to have an excuse to charge a higher premium, which in this case, we're not even doing that, as I'll show you. So it means they have options. What if they want to maintain the death benefit? They can convert the term rider, and they can convert that guaranteed to any of our whole life contracts, even our flagship product. What if they want to stop paying premiums and still have a legacy? Well, in this case, since the cash value is in there, you can pay up the contract. You can say, okay, I want to buy whatever paid up death benefit I can have with the cash value I have in there now. And the death benefit will come down a little or a lot depending on when you do the conversion or the reduced pay up. And then it just starts growing again from there. The cash value continues to grow uninterrupted from that point. What if they need access to cash? Well, as I mentioned before, they can use this as a retirement supplement, and they can access that money on an income tax-free basis. And it's good to use it strategically because this is we like to call your last best asset. Nothing else is more simple than whole life, where, if you have stocks or bonds or real estate and you transfer that to your children, your grandchildren, there's always tax issues and things like that to take care of. With whole life, you just notify the carrier and you get a check in 10 days. So it's really the last best asset. Loans and withdrawals can be used strategically when maybe the market tanks. Maybe you want to give that asset time to recover if the market goes down. You don't want to be taking withdrawals, distributions for the crushed asset. So that gives you more options and strengthens your overall retirement plan. And we like to talk about how it's not just about what's happening inside the whole life contract, but what the whole life contract helps outside of your of itself for your overall financial plan. Or what if they just want to surrender and walk away? This coverage has been great. It protected my family during my working years, but they're grown and they have great careers, and I just want to do something completely different. Excuse me. You can do that. They can just take the value at any time. There are no surrender charges in whole life ever. Who are we targeting with this product? We're looking at low-cost, long-term guaranteed death benefit, but we have a little twist on ours. So this space is dominated by the GULs of the world here, and we're going to take a closer look at that particular market. But what's different about us? We have an exit strategy for value while you're still alive. So we'll take a closer look at that. How about clients looking for a forced savings aspect to their insurance coverage? Maybe somebody's overfunding their taxes, and they like that because they can get money back at the end of the year from Uncle Sam, even though they're not earning any interest on it. Some people like to do that. I don't. Some people do it, and you could take that money and put it into the paid-up additions rider on the Horizon Guarantee. Horizon Blend, and build up a little, again, of that retirement cash value. Those looking for maximum permanent death benefit with a long-term premium flexibility. So these are, I don't know if you're familiar with this, but it's LEAP. It's called LEAP. And basically what these advisors are doing are finding premium anywhere they can find it. And the idea is to get as much death benefit as possible for the premium that they pay. And it's designed to replace all the assets that they have in retirement. And so that's the LEAP strategy. Again, and it helps to help you have a better retirement and be able to leave a better legacy. So that's what those individuals are trying to do. And then this is great for that because LEAP only works with whole life and term. And this is a combination of those two products. Clients looking for benefits of participating whole life on a budget. So you have those who they want the guarantees of whole life, but they just don't have the cash flow. Maybe they're younger and they're 35 and their careers are just getting really off the ground. Eventually they might have better cash flow and they'd be able to convert the term into another whole life product, and that's guaranteed conversion, and that's also another sale for you. So let's take a closer look at the Horizon Blend versus that low-cost long-term death benefit dominated by GUL. And don't take this wrong, it's not a disparagement of GUL. It's a great product. I'm just going to flesh out the differences here between the two. So we have it's called at the top of all of these GUL contracts is flexible premium adjustable life. But what happens if you make a mistake in a GUL? What if you don't pay the premium on time? Well, you jeopardize your death benefit in whole or in part. What if you want to just skip a premium payment? Well, your plan's just going to go away. What if you want to change the premium and maybe reduce the death benefit? Well, there are some contracts that let you maybe adjust at one time, but it's a difficult thing to do because there's no cash value growing in the contract, or substantially none. And so that reflects on changing the premium as well. You can't really just change the premium on a GUL. So if it's not flexible and it's not adjustable, why are we calling this universal life? And let's take a little closer look at what I mean. Here's our male, 35, preferred non-tobacco, $500,000. And we have Horizon Blend up there with GUL 1, 2, and 3. Now, these are actual top GUL carriers. We just changed the names to protect the innocent or the guilty, as the case may be. GUL number 1 is a little cheaper, $25.28 versus $24.35. And 2 and 3 are priced higher. So right off the bat, you can see that this is at a price point that your clients are used to seeing. And it offers some additional benefits. There's always give and take on these products. So what is that? What is the difference? Well, how about cash value? With the Horizon Blend, you're growing cash value after the first year every single year. And the client can access those funds anytime for any reason, either through loans or withdrawals or just to take the whole cash value and go. With the GULs, you really don't have any cash value. I mean, you have some that will have the ability to build cash value for after about year 5, and that kind of goes away after that. You can't really do anything with it. But they do have a return of premium on some of them. Well, on one of them, the top one. So GUL number 1, if you take the money out in year 15, so there's no real money in there, by the way. It's a ledger. But if you do take the money in year 15, you're going to get 60% of your premium back. And in year 20, you're going to get 100% of it back. And if you wait again until you're 25, you can also get 100%. With the Horizon Blend, you have 79% of all your money in year 15. You have 89% in year 20 and 100% in year 26. So a little different there, but the main difference is that those are just benchmarks for the whole life portion there. That Horizon Blend is building cash every year. So they can take it anytime they want. They don't have to do it on the carrier schedule, because life doesn't happen on a schedule, right? We know this now. We know that surprises come up, emergencies happen. So what if the client needs to get to the money in year 2, 3, 4, 17? Any of those times when the client would want to be able to get some of their premium back in the GUL, they're just not going to be able to do it because there's no cash there. How about if they just want to reduce pay up the contract? Well, you certainly can't do that with the GUL. We can do that. We can reduce pay up this contract, in this case, at age 65, so 30 years later when they're retiring. They don't want to pay premiums anymore. We reduce it up, and they have $187,000 in guaranteed death benefit. That's not even with dividends. So they don't have to ever worry about paying another dollar premium. It's always going to be there for them, and the cash value's in there as well. With the GULs, you can't stop paying premium. You have to keep paying until you die. And so that's the real benefit here, is the ability to get access to the cash value and its benefits without dying. The whole life just isn't just about death insurance. This is life insurance. This is the ability to use living benefits while the client is alive to help protect them from the unexpected and to bolster everything else they're doing in their retirement plan and their wealth building plan. It provides them with more flexibility than a typical GUL will. They can skip a premium payment because they have that cash value building in. They have dividends that might offset the premium completely down the road, or just withdraw the cash value out and pay the premium from those paid up additions that it's earning. You can reduce the face amount anytime. They can reduce the face amount every year if they wanted to. You just can't do that with a GUL not that easily, and not more than once that I've seen. They can reduce pay up the contract completely and just never pay another premium again. They can stop paying premiums by either using the cash value to fund those premiums, or again by reduce paying it up. They can take income on an income tax-free basis. And how is that going to help them in their retirement? Again, with when the markets crash or things don't go so well, and you only got one chance to retire the correct way, they would have this product here that grows whether the market's up or down. Doesn't matter, to help bolster everything else they're doing. And they have an exit strategy. While they're still alive, they can get out without having to die to get any value out of the contract. We talk about opportunity costs. How about opportunity loss of buying the GUL versus the Horizon Blend? So the premium is a little bit lower, less than $100 lower. They have the same guaranteed death benefit there. Now, the GUL contract will maintain the death benefit past year 20, so there's the trade-off for us. But we're growing cash value, guaranteed cash value growth of $45,000 by year 20. What's the cash value in the GUL? It's zero. It's going to be zero. So they would have to invest an additional $1,314 per year, the client would, in a side fund, earning 5% guaranteed every single year to match the guaranteed cash value in the Horizon Blend. And I know you can add riders to some of these products and things like that, but they don't guarantee a cash value growth. They might guarantee like an interest rate, but this cash value in the whole life, the guarantees on the cash value are unmatched. It grows every year. It has to, and it can't go down ever. And you have the opportunity to earn dividends. You can earn, these dividends are not guaranteed, but we've paid them every year for over 100 years straight. What are the odds that we're going to pay next year? Probably pretty good. With the GUL, obviously, you don't have dividends. It's not part of the contract. They're not designed for that. You have additional revenue opportunities with the Horizon Blend. You can add a waiver of premium and create a self-fulfilling plan for your client and earn additional commission while doing it. So these paid-up additions riders, you can think of them as, well, we have waiver of cost in the UL and IULs, right? But what does that do? That just stops expense from coming out of the contract. We're actually paying the premium and growing the cash value. It's as if the client was paying the premium themselves. And that allows you to add the belt and suspenders onto their retirement plan. How many clients have a guaranteed retirement plan? if you add we have a version of this too for the paid up additions rider, which remember is the cash builder. So if you put the waiver of premium on the base and on the paid up additions rider, we'll match or we'll contribute up to their maximum funding on the PUA rider. So they're getting the base premium paid, they're getting the paid up additions rider paid up to their maximum, even if they're not funding up to their maximum. They could have $15,000 a year going to the paid up additions rider, except maybe they're only funding it at $5,000. If they go on this waiver, we'll fund the whole $15,000. That's pretty powerful. And now they have a self-fulfilling plan that they know will be there whether they can work or not. How about converting the term? That's another sale for you and additional value for your client. You have the cash value growing as we've seen, and that provides other possible future sales for you as well, whether when they decide their needs have changed, they want to do something different. And the key here is don't walk away empty-handed. Don't let the perfect ruin the good. We can sell them a term policy, and when they are ready, when their cash flow is better, they can convert that to a whole life contract at that time. And you can convert any of our terms into any of our whole life products, even our flagship product. And since we're not above bribery, we do have fantastic conferences. We're going to Berlin in 2019. And if you sign up through IMES, we'll double your credit for the first 4 months of your production. And I know we have a fantastic destination in 2020 as well, and I can't reveal it, but it's awesome. And we feature like kings and queens. It's a fantastic conference. There are people walking around with wine and hors d'oeuvres everywhere you go, and we don't hold business meetings. We have like 1 hour meeting, but other than that, you're out and just enjoying activities, and it's fantastic. So I encourage you to take a look at Horizon Blend, take a look at Mutual Trust if you haven't before, and there really are a lot of opportunities to save money, to save the client money in whole life. It's not just this dodgy high price product that people think it is. So I encourage you to take another look at it. And Sandy, I'll turn it over to you for any questions. Thank you.
Wonderful. So what I'm going to do is put out an additional poll question while we answer questions. And this is, would you like to get contracted with Mutual Trust? So one of the questions we have is the Horizon Value still available?
Yes, absolutely. The Horizon Value is the primary flagship product for Mutual Trust. It represents maybe 60% of our business, and it is very much available and was relaunched, as I mentioned, in 2016 with a significantly higher dividend scale. So it's the exact same product with guarantees and the high cash building in it and everything. So if you matched up the Horizon Value versus a comparable product from any other whole life carrier, Penn, Mutual, Lafayette Life, you look at our guaranteed cash value in the first 6 to 10 years versus those carriers, and our guaranteed cash value is higher than their guarantees plus dividends. So it's really unmatched in the market. But yes, it is very much available.
Wonderful. And do we have any other questions? And of course, if you don't think of a question until after this webinar, I will be getting in contact with each and every one of you. You will also receive this webinar in a recorded version, so that will be sent out as well. Doesn't look like we have any additional questions. Kip, just so greatly appreciate your time. Mutual Trust is a great company to work with. Very easy if for some reason you want to go direct with them on questions or illustrations. They have a great staff to do that. Of course, we're happy to run those as well. Everyone, I hope you have a very safe and successful week. Again, thank you all for your time. So greatly appreciate it. Bye-bye.
Thanks, everybody.